Secret channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the markets during the day and how we can plan for a better trade for the next day. So today was very good, experiment with volatility, enough of volatility, but the only thing is there was a big gamma move downsides in between. So market basically gained more than 1.5% gain is there, but it is a red candle after all, right? Because it faced resistance of getting the gap resistance on the upside. So let's analyze and see what else we can learn, right? So the pre-market analysis for the March 11th, Friday, tomorrow, 2022, would be based on all the parameters that you see on the left side, which you'll be looking at the charts, and we'll have additional data analysis based on additional parameters that you see on the right side. We'll also have some wrap-ups and actions. So this is what the charts, the price pattern. You can see that there is a gap. There is a gap up that happened. In Bank Nifty also, there is a gap up that has happened. But it faced resistance. It could not retain the gains that it had made, and then slipped down. Right. So it's overall a red bar that got formed. But the gain happened in the gap up, basically, right? And let's summarize that 250 points on Nifty, 1.5% is that, right? And it then hit the gap resistance, right? We have the resistance that is there in the Nifty and resistance that there above. So Nifty basically hit the gap resistance and then formed a red candle. So price action is moving in a trend line, right? If you're drawing a trend line, this lower than the upper side, and the lower and the upper side of the Bank Nifty also, you can see that's a sliding down move is what bearish move is what is happening, right? And this is a double top M pattern in the weekly candles, right? If you see, you can clearly see that we are at a neckline. So that is in the Bank Nifty also. So Bank Nifty basically nearly 2%, 660 point gains, right? Additional gain from below. So that's a good bounce of nearly 7% of the Nifty that has happened, right? So here also you have a very good bounce, decent bounce that has happened after a major correction. Yeah, so the thing is, Bank Nifty has gained enough stocks, 2 days of 600 plus points of gains, right? And the gap resistance that was there, the first gap resistance is taken away here. There was a gap here, so that gap was closed today by the Bank Nifty. Nifty had closed it earlier yesterday, and also the Fibonacci, retracement level 61 also is reclaimed. Nifty has reclaimed that yesterday itself. So it's double top trend line that bearishness price action can also already be seen in both. That remains to be there. Yeah, you can see that it may be very close to the upper trend line now. No? So the question is whether it can take out of the trend line, break out of that to the upside, and also take out the gap that is there at the top of the trend line. So intraday price action, if you see, this is what happened, right? It gapped up and hovered in a range bound until the afternoon. The afternoon it broke down, but again then tried to recover. It did not close the full gap gain. So whatever left behind is 1.5%. Same Bank, big gap up, then range bound till the afternoon V shape. So overall, if you see, it's an inverted V shape move. So that's, and last minute there is an attempt to again make another view halfway. So that's 1.5 V shape, inverted V kind of shape moves means pure up, very difficult to trade. Market reverses sharply. Right? That's exactly what happened today. Right, the major gains happened in the gap up, basically in the both indices. All the bands, if you see, you can understand that the distance from the median to the bands are high. That's why the volatility. Same with Bank Nifty also. And it's the downside breakdown that you can clearly see, which indicates bearishness overall. But one thing you notice is price is trying to hit the median and then move above that probably coming days. You never know. But bearishness is what bond demand is both indices. Support resistance zones. We can order this level. Today there is a gap that is formed. That gap is support zone 16,350, 450. That's also the Fibonacci 50 level. And above that you have the resistance of 16,5 to 16,616. and then 16,700, 16,750. That is where the gap, the second gap, the major gap resistance is going to be, right? And then above that, in between the gap itself, we have 16,800 and 16,900 Fibonacci 38 level. Above that, we have 17,000, 17,050. So a candle above the 17,000 clear green candle could indicate that it is breaking out of this trend line and also conquered the gap. So that would mean some kind of thinking towards the taking long position side. Right? Until then, you never know when it is going to make another lower low and then heading towards lower another lower high and then heading towards another lower low. So it may be that, you never know. So this conquering this crucial window gap resistance is going to be critical in the coming days. Right. Similarly, same gap is there in Bank Nifty also. You can see that. So let's look at the levels once again on the downside. Support will be 1650. Fibonacci 50 will move support. It is also confluencing with the new gap that is formed from today's up move. Now below that you have 16200, then you have 5950 levels, which is the Fibonacci 61, which is clearly conquered. That's going to act as very good support level. And below that the swing low of 15500, 15650, and then below that 15352, 15450 levels, also support zones. Similarly, Bank Nifty, you have a gap that is formed, right? That's going to be a very good support. Support zones is coming near to 34,100, and it's a Fibonacci 61 level that is also close today. So this 33,600 to 34,100, it's Fibonacci 61 retracement level and other gap combined. So that's going to be a very good support zone. And 34,000 350 to 750, that is also next resistance on the upside. Then after that, this is actually a support because it has come and closed at this point. So the support is going to be 34 of 350, 34 750. Below support 33,600, 34,000 61 levels, and below then 32,400 to 32,800, and below that 31,800 to 32,000 levels, 100 levels. Resistance on the upside would be 35,000 levels, which is the Fibonacci 50 retracement, where it got hit today and then it fall back. So that's going to be a major resistance to cover tomorrow. 35,600 to 35,900, that's the next resistance above that, and 36,300 to 36,800 Fibonacci 38 is going to be major resistance above that, and above that you have the 36,900 to 37,100, and then 37,500 Fibonacci 23 combined, which is going to be very crucial to clear in the next coming days, coming week probably. So this gap resistance is the same as this gap resistance, right? So this is on the Bank Nifty. So that's going to be, so make a note of these levels. Momentum divergence levels, if you see, it is like Nifty almost, Nifty is in the sideways, definitely momentum, but on the bearish yesterday only it climbed. Today Bank Nifty almost climbed. You can say it is almost in the sideways zone. So that's a momentum improvement that has happened here. So medium term remains to be, Bank Nifty remains to be bearish, and sideways is what the momentum on the Nifty medium term, right? So overall you can say short term it's somewhere near to the sideways zones in both indices, and there is a divergence that hit almost near to the lines 16,790. It is almost reached the target, but there is little more potential move that may be left, right? But yeah, so this divergence, bullish divergence, has worked out well on the Nifty. Now the divergence is seen on the Bank Nifty. Trend indication is, obviously it is bearish, but does not cross over to the bullish zones yet on the Nifty short term, and Bank Nifty also it is bearish, but it is heading towards a crossover. So the main thing is to notice the strength indicator of the trend, which is this ADX. Green has turned and taken a bend downside. Bank Nifty also it has taken a bend. So normally when this green makes a bend, it indicates the strength is twisted. The trend is twisted already, and it's only a matter of time where crossover happens on the DMI positive zones, right? So it is almost going to end, but as of now, it remains to be bearish trend only in both indices on the short term. Probably in the coming weeks, it may happen. It may cross over. Volatility cooled off further 7%, and it is now to 25.5 levels. 26.18 is the implied volatility. By volatility percentile is also high, 97, 96 points. So overall volatility above 25 is high itself, but it is a good cooled off from the 30 is something optimistic. So the fear is gradually going down, but not completely gone down. A substantial amount of fear in the market has come down. This is indicated by the down move from the 30 levels to the 25 levels, right? But still, we are at a very high level, and we have to be cautious until it closes below the 20. Openness data. Right? So today's charts and graphs of the open interest on options data may not be that much relevant because today was the expiry and tomorrow is the first day that the active trading of this options strikes will be happening. So things will be clear from Monday only, basically. But for reference purpose, I am putting this expiry March 17, 2022 levels for Nifty is 16,000 and 18,000, 2,000 points wide range. So that is closing or closing from Monday. We'll get more clarity. Where options writers will be more active in defining the levels. So 15,000 to 17,000 also is good enough. Second level of highest put and highest resistance, which will act basically highest put and calls, which will action support and resistance ones. 32,500 and 36,000 is the range, right? That's some 3,500 points of range where the highest puts and highest calls are there, where you can find support and resistances. The second level will be 33,000 and 35,000 on the BANKNIFTY. So 0.63 is the put call ratio, which is not bearish, you can say. 0.58 is also not bearish, you can say, but it's very close to the bearishness, both. So there's some kind of bearishness that is indicated on the options data as of Friday. Not much relevant as I said before. Long build up with the futures open interest photos happened today. The heat map, if you see, overall good green development except TCS didn't do, and then some tech companies. Two IT stocks didn't perform, but other IT stocks have done well. So across this, sector, green is seen. So that IT and pharma did not. So IT and pharma are the ones that they're defensive stocks. So they are the one that's dependent on the dollar and US markets more, and that is for some reason that was rising up whenever the other sectors were not performing. But today, some sluggishness is there, probably because the dollar has cooled up a bit. Telecom also did not perform good, but that's a sectorial view. Now, index heavyweights, we just quickly go through the major heavyweight stocks. You can see that it was a red on a bank, HDFC Bank. It is an attempted entry into the sideways zone, almost there. Momentum I'm talking about, and that is actually a bounce from the major supports on the downside. So it has got into the trend line back for it had slipped off earlier. Huge volumes can be seen in HDFC Bank, right? And HDFC is also a red, but it is a gap up that happened. Same like HDFC Bank also. It is a gap up opening but could not sustain. So overall there is gain, momentum gain is there. You can see good volumes are there, and that's what HDFC twins behaved exactly like how the index behaved. Lions also showing some exhaustion. It is very close. It is found a small body candle, mounted sideways, very close to the breakout zone of the channel top. So we would need to watch out whether this breakout will happen next days or not, or would it again fall back within the channel for another round of exact moves. Never know. Nifty also showing some red candle, but momentum has climbed to the bullish zones. Volumes are good, trend is good. Price pattern seems to be a breakout from the box, so it could go further, but for some reason IT didn't perform. Same happened for TCS also. It's a red close, although there are some momentum gains. Both are in the sideways ones in FI and TCS, both are in sideways. Lions already on sideways. We talked about that. So banks, ICICI Bank again, it's unable to climb to the sideways zone yet. The ICICI Bank closed red. It was trying to climb back the major resistance zone which had slipped off from its hands earlier and failed and then fall back. But at a major support zone right now it is, right? Where the ascending triangle breakout had happened earlier. So it has to climb into the sideways zone before we can say anything about it. Till then it's going to be bearish. So ICICI is bearish. While HDFC is not bearish, its momentum is at least in the trying to climb into the sideways zone. Kodak is also sideways zone, right? It closed red today, but momentum is good, volumes are good, At a major support zone, remember the Browns happened. Now facing some resistance on the next support which had slipped off, and all these lines that is marked are support zones. Right. So in summary, we can say that good attempt to recover the momentum happened. IT stocks didn't do well. Reliance on the edge of breaking out. Sectoral performance, if you see, it's like several sectors turned from bearish into bullish, bearish into the sideways zones. So reality did that, FMCG did that, Pharma did that. All three were in the bearish zones, and now all three had performed well yesterday and today also a little bit, except for Pharma. So it has moved to sideways, so that's a good part. Now the bearishness is remaining only in the auto sector. Rest is all sideways. IT metal is almost very close to the bullish zones. So IT today went flat. Metal closed green. Auto also closed green. Pharma closed flat. FMCG closed 3% up. Realty 2.3% up. So that's what the shift of three major sectors from bearish zones to the sideways zones is the um, good thing that happened today. Auto is yet to recover. It's almost getting into the sideways zones, and metal is at the edge of getting into the bullish zones. IT remains sideways. That's the sectoral performance. So as long as it's in sideways, we just can't do. It's not a confident way of entering in a top-down approach of picking other stocks from the sector. Institutional participation was heavily bearish the last several days. Somewhere I read that it was $2 billion of selling that happened in just 2 days from FI selling. That is the kind of worrying FI institutional selling that is happening. Let's just quickly see if the data is updated. No, data is not coming yet, but I believe it must be a reduced amount of selling, that might have happened today. Reduced in the sense at least 2 to 3, 3,000 crores kind of selling where the cash might have happened, but domestic institution might have done the rest of the bit to move the market in a green zones. That might have, but numbers is not arrived till now. They're not out yet, so we'll have to check later. So dollar showing some green again. That means rupee is weakened after it had cooled up a little bit. Today it is again spiking, and because the momentum is at a very high level, and there is every chance that it has taken a support on 60 and can again spike up. So until it cools up to the 75 below levels, we have trouble. And there is some cool off in the dollar index also, you can see, but the momentum, keep in mind that it is at a very high zone, so unless it falls in the sideways zone and a crossover of the trend happens, until then anything can happen. The spikes can keep coming, and having the rupee at 76.5 kind of levels is crazy. Crude is cooled off a little bit, but today it's a green. That's the same case. There is a divergence, bullish divergence, which says that it can spike up once again and hit the 13-year high once again. So it's very crucial zone. The crossover of the trend to the bullish zones has not happened. So basically, crude is at very high level. Some cool off has happened, but it just closed green today, indicating that it can spike up back again. And gold breakout is giving green today. It had hit the 27, very close to the 2074 levels, not exactly hit the all-time high level, very close below that, and then faced resistance and then cooled up a little bit, but today it's trying to move again. That is the same. Gold is also having very high momentum, bullish momentum, very high volumes, and it is clearly a breakdown that not stop here and can continue. So gold breaking out, oil breaking out, rupee as weakening, dollar is at very high levels. So that somewhere remains there. US markets, it had Dow Jones. You can see that it had gone to the bearish zones and given up the major support zone, but it had climbed back to the same place now, which is giving some hope. And Nasdaq also had slipped off from the support zone and it's at the edge of the trend line, and that is showing some redness. But you'll have to watch all this in the next day morning. Tomorrow pre-market we'll have to see what levels, how do they perform. But otherwise, it is still having big selling pressure that you can clearly see. There's no recovery at all happening. It is either fallen off and then trying to get back into that support zone. That is where Nasdaq, S&P 500 and Dow all are indicating, right, on the edge. Two actionables, Virla Cable. This is the weekly candle, but it is a long call. The entry has to be done on a daily or lower, even lower time frame, and high volumes, high momentum, bullish trend, price pattern, breakout from a cup and breakout from a rounding pattern, and you have resistances marked at 181 and 229. Trade your stop loss and you can give. It may be a good bet for a long swing or even personal probably. Hindalco steel sector is performing very high volumes. There is a bullish reverse momentum divergence, which can, and the green candle which is wide range bullish, well within a channel, and trend is also bullish. So it can give good moves to the channel top at least, right? As long as steel sector and steel issue, scarcity is there. As long as the sector is performing, this could give, it may be a good bet, right? All steel sectors are basically moving. So Hindalco long call, Virla Cable long call. Wrap up, it's a neutral with a mild bearishness in the short term. That's for tomorrow. Market view is that. That's my market view. And it's based on the chart pattern, support resistance levels, the momentum and the bearish indicators that we have seen, the Bollinger Band downside breakdown, all of this nutshell. Plus, what these two lines are indicating the reasoning behind my view. May not be yours. You have to derive your own view based on all this analysis that we have done and all the 20-30 slides, right? So market showed 7% of recovery in just not 2 days, actually 3 days. And the bounce up after 15.5 correction is what happened in so, but still there is selling pressure. You can see that it has hit the gap resistance and a major gap resistance, and the channel breakout zone is where we have it. So I am feeling that the Friday tomorrow there may be some resistance that may be in play, right? And it may be, it's more like a, that's the reason why it's more like a neutral and mild bearish. So, but because FIs are not stopping selling at all, 1 billion kind of per day selling is what is happening. So any, as I mentioned yesterday, is 17,000 above and on the Nifty and 37,500 above on the Bank Nifty has to be there before we can think of any bullishness. And then it will be a mixture of bullish, bearish, sideways, all this choppy moves can happen. Never know where it is going to end up until you reach that. So war cries is still there. No, the war is still happening. Some negotiation talks are happening. So this peace and war talk will continue. Market will be volatile until there is a clarity that emerges out of the impact on the economy, the impact on business and markets and everything, right? So volatility is still about 20. It's 25 plus, not 27. So 25 plus is still very high volatility. You have to be cautious. Tomorrow is a Friday profit booking can come and TK may be less. Make a note of this if you're taking options trading. If there is a continuous selling and there is no stoppage to that, we have seen that, right? Day first day 8,000 crores in one single day. Cash was sold. Now, not too many positive things are there as long as the uncertainty is over, right? So stay away from market is the best strategy if until the week's goals of below 20, right? And hedge your positions if you're long term with gold still is some things left, more moves that can happen as long as the crude and dollar is rising up. And still this may be time to pick up quality stocks in the SIP mode. Not put in all your capital, but in SIP you could buy good quality stocks which still may be at a very low reasonable price. Option setups, vertical counter spreads. So always use hedge setups, any of this vertical spreads, current spreads, or non-directional strategies, whatever. But have the risk defined if you are carrying it all night. And use stop losses tight because V-shape moves are there every single day. 1 V-shape or 2 V-shape or 3 V-shape, sometimes even 4. That's the kind of volatility that is in the market. So always look at the price patterns. Trade your stop losses. Trade less volumes, position size less, have wider range, right? And put tight stop losses in trading, and also use risk-defined strategies to play options. So that's a view neutral to mild bearish because of the immediate resistance of the gap that is there upside. So if that helps you to frame your own view for next week, consider hitting the like button and share it to your friends and colleagues. We have very few subscriptions, so your support in this regard would be highly appreciable. Thanks a lot. Happy trading, happy learning. Bye.